Hello everyone, welcome back to the channel, Mr. Rich Trader, and in today's video, I'll be showing you how I'm starting a live trading session with just $200 using a compounding strategy that I've personally developed, tested, and proven over time. I don't trade based on feelings or hype. I only enter the market when there is a clear structure, confirmed momentum, and solid technical signals to support the move. That's the foundation of the strategy I teach here on this channel. Every trade I take is backed by logic, whether it's a support resistance bounce, MA crossover, MACD divergence, or a clean rejection candle. I only act when the setup meets my strict trading criteria. And for those of you who are serious about growing as a trader, if you want to learn this strategy in full, or if you want to receive my daily trading signals along with step-by-step mentorship, you're welcome to join the VIP group, Mr. Rich VIP. Inside, I'll guide you to not just chase profits, but to build a mindset, a system, and a routine that can make you last in this market for the long run. Let's open the market now and see how far we can grow this $200 account with a disciplined and structured approach. I entered a buy position in this market based on several strong technical confirmations. First, we've seen a clean breakout above the resistance level, which signals strong bullish momentum in the market. Second, the candle that broke through resistance is a Marubozu candle, a full-bodied candle with little to no wicks, indicating that buyers were in full control throughout the entire move. And third, both the yellow and green moving average lines are pointing upward, confirming a strong uptrend is forming and likely to continue. Let's see if this entry brings profit. Okay, profit. The price moved up just as expected, following the structure and confirmation. Let's open the market again and continue trading with discipline and precision. I took a sell position in this market because the downtrend is very clearly defined and strong. We can clearly observe 3 consecutive bearish candles, a formation known as 3 black soldiers, indicating strong selling pressure and a decisive shift in market control. What's more, all 3 candles have closed below the green line, which represents my primary moving average level. This further confirms that the bearish trend is active and likely to continue. With both price structure and technical confirmation aligned, I felt confident in executing a sell position at this level. Let's see the result. Okay, profit. The market followed the trend perfectly and the analysis held true. Now let's open the market again and continue with clear structure and disciplined entries. I entered a buy position here based on 2 solid technical confirmations. First, the red line, which previously acted as resistance, has been cleanly broken with a strong bullish candle closing well above that level. This is a clear signal that the resistance has now turned into support. Second, we saw a red candle that touched the red line but failed to break back below it. That's a strong rejection signal, showing that sellers attempted to push the price down, but buyers held their ground and kept the price above the new support level. With both a clean breakout and a strong rejection confirmation, I was confident to take a buy position, expecting the uptrend to continue. Let's see if this plays out in profit. Okay, profit? Price bounced just as expected, confirming the breakout and retest setup. Now, let's open the next chart and continue trading with clarity and control. I've taken a sell position on this market due to a key crossover signal on the moving averages. Technically, the yellow line, which represents the short-term moving average, has just crossed below the green line, which is the long-term moving average. This type of crossover often marks the end of an uptrend and the beginning of bearish momentum. It's not just a visual pattern, It represents a real shift in market sentiment, where sellers begin to overpower buyers. With this confirmation in place, I decided to enter a sell position, of course with proper risk management and trading discipline. Let's see how this plays out. Okay, profit. The market moved down as expected, respecting the crossover and trend structure. Let's open the next chart and continue with a calculated and focused approach. All right, I entered a sell position on this market because the downtrend is clearly intact. And one of the golden rules in my strategy is simple. Never go against the trend, follow it. The recent candles are showing consistent bearish pressure, and price remains below the moving average, which confirms that sellers are still in control of this market. There's no sign of reversal, no reason to go long. So the most logical move is to go with the trend and open a sell. Let's see if this trade pays off. Yes, profit. The downtrend continued, just as expected, and the trade closed in our favor. Let's move on to the next setup. All right, I've entered a sell position based on two key technical confirmations. First, we can see that the red candle successfully re-entered below the resistance area after a previous breakout attempt. This is a classic case of a false breakout or a strong rejection, signaling that buyers failed to hold the breakout and sellers have regained control. Second, we also have a MACD crossover confirmation, where the MACD line has crossed below the signal line, a strong indication that bearish momentum is starting to form. With both the price action rejection and the MACD crossover in alignment, I felt confident executing this sell trade, expecting further downside movement. Let's see how this plays out. Did we secure profit? Yes, profit. The market moved perfectly in line with our analysis. A clean and confident setup. All right, I entered a buy position here based on two strong technical signals pointing toward an uptrend. First, we have a bullish crossover on the MACD, where the MACD line has crossed above the signal line. A strong indication that bullish momentum is starting to build and often the first sign of a potential reversal to the upside. Second, I also noticed that the green and yellow moving averages are getting close to crossing upward. Once that crossover happens, it will provide even stronger confirmation of an emerging uptrend. With both MACD and MA signaling in alignment, I felt confident entering a buy trade, anticipating a continued bullish move. Let's see how it plays out. Yes, profit. The market pushed upward smoothly after both indicators aligned perfectly. And now, as always, let's open the market again. All right, I've taken a buy position in this market based on several strong technical factors. First, we had a clean breakout above the red resistance line, and right after that breakout, a gap appeared between two candles, which typically signals a sudden surge in buying pressure. Second, I observed a triple moving average crossover, where all three MA lines aligned upward, a strong confirmation that a new bullish trend is forming. Now, I don't know exactly how long this uptrend will last, but one thing is clear. When structure, momentum, and indicators are all aligned upward, the best move is to follow the trend. So I decided to buy early in the trend, before it becomes overextended or too late to catch. Let's see how it turns out. Yes, profit. The bullish move continued as expected, with clean structure and confirmation. Let's see if there's another opportunity we can catch. Alright, I entered a sell position here for one very clear technical reason. The red line represents a key resistance level, and as soon as price touched that area, we saw an immediate rejection candle, indicating that selling pressure is entering the market from that zone. This is a classic behavior of a strong resistance, and as long as it holds, the best move is to sell from the top, reacting to the market's rejection. I'm not guessing, I'm simply responding to what the price structure is telling us in real time. Let's see how this trade plays out. Okay, profit. Price dropped just as expected. The resistance held perfectly, and the setup worked out. Alright, I've taken a sell position because there's been a crossover between the green and yellow lines on the moving average indicator. This type of crossover is one of the most common technical signals used to identify a potential trend reversal. When both lines cross and start pointing downward, it indicates that bullish momentum is weakening and sellers are beginning to take control. With that signal in place, I followed the market direction with confidence and proper risk management. Let's see if this setup brings in a profit. Yes, profit. The price moved down exactly as expected. A clean confirmation from the MA crossover. Alright, that's it for today's trading session. The market condition is no longer ideal, so it's better to stop while we're ahead and protect what we've gained. And I'm proud to say, my account balance has now reached $98,000. This didn't happen by chance. It's the result of using a proven strategy with discipline and consistency. If you want to learn this strategy and receive high accuracy trading signals every day, feel free to join the VIP group. Inside the VIP, I share exclusive setups, real-time analysis, and powerful compounding strategies I don't reveal publicly. Thanks for watching, don't forget to subscribe, and as always, follow the trend, stay disciplined, and never chase the market.